real estate in America is undergoing a seismic shift. From Cleveland to Austin, the market is grappling with skyrocketing interest rates, rising taxes, and an oversupply of apartments driving rent reductions. While some see this as a crisis, others see an unprecedented opportunity. Imagine landlords voluntarily slashing rents by $200, luxury apartments sitting vacant, and developers struggling to stay afloat. The next few years will bring challenges for some, but incredible profit potential for others. In this video, we'll dive into what's really happening in the real estate market, why affordability is the game changer, and how savvy investors can position themselves to thrive. Whether you're new to investing or a seasoned pro, this is your chance to turn market chaos into financial success. Let's get started. The real estate market in 2025 is a dynamic mix of challenges and opportunities. Several key factors are reshaping the landscape, presenting both risks and rewards for investors, homeowners, and renters alike. One of the most significant shifts is the impact of rising interest rates. After years of historically low mortgage rates, 2025 has seen rates climb to levels that many buyers find difficult to manage. This has created a domino effect, slowing down home sales and reducing demand in the purchase market. Sellers are finding it harder to attract buyers, leading to price stagnation or even declines in some regions. For first-time buyers, affordability remains a major hurdle, with many turning to the rental market instead of homeownership. However, the rental market isn't immune to its own challenges. Across many cities, an oversupply of apartments has led to a surprising trend: landlords offering rent reductions and concessions to fill vacancies. Luxury apartment buildings in particular are feeling the strain, as developers built aggressively over the past few years, only to find that demand hasn't kept pace. In some areas, renters are negotiating discounts of $200 or more, marking a stark contrast to the rapid rent increases seen just a few years ago. Meanwhile, rising property taxes and maintenance costs are putting pressure on landlords and homeowners alike. States and municipalities, eager to generate revenue, have increased tax rates, adding another layer of financial strain. For landlords, this often means passing on costs to tenants, if the market allows, or absorbing losses when tenants simply can't afford higher rents. Despite these challenges, 2025 is also a year of opportunity. Markets in cities like Cleveland, Detroit, and Pittsburgh are becoming hotbeds for savvy investors. These cities, long overlooked, are seeing renewed interest due to their affordability and growth potential. Investors are snapping up properties at relatively low prices, betting on long-term appreciation and steady rental income. Another trend shaping the market is the rise of alternative housing options. Co-living spaces, tiny homes, and modular construction are becoming more popular, especially among younger renters and retirees seeking affordable and flexible living solutions. These innovative housing models offer cost-effective alternatives to traditional homes and apartments, creating new opportunities for investors. In this evolving real estate environment, those who can adapt to shifting conditions stand to gain the most. The key is understanding the market dynamics, identifying opportunities where others see problems, and taking action at the right time. As we navigate 2025, the real estate landscape will continue to offer challenges, but also immense potential for those ready to seize it. One of the most pressing challenges in the 2025 real estate market is the looming $1 trillion refinancing problem. This issue, which has quietly built up over the past few years, is now taking center stage, threatening both homeowners and commercial property owners. It stems from a perfect storm of rising interest rates, tightened lending standards, and ballooning debt maturities. Let's break it down. Many homeowners and real estate investors took advantage of historically low interest rates during the pandemic era, locking in short-term, adjustable-rate mortgages or interest-only loans. For commercial property owners, this often meant securing loans with balloon payments due after a few years. Fast forward to 2025, and these loans are now coming up for refinancing. Only this time, borrowers are faced with significantly higher interest rates. The Federal Reserve's efforts to curb inflation have resulted in rates that are nearly double what they were just a few years ago. This means monthly mortgage payments for homeowners could skyrocket, leaving many struggling to make ends meet. For commercial real estate investors, the situation is even more dire. Properties that were profitable under lower rates may now fail to generate enough income to cover debt obligations, leading to an uptick in loan defaults and foreclosures. Commercial real estate is particularly vulnerable. Office buildings, already reeling from high vacancy rates due to remote work trends, are finding it nearly impossible to refinance at favorable terms. Retail properties, too, are grappling with declining foot traffic and rising operational costs. As a result, analysts predict that a significant portion of the $1 trillion in loans coming due could fall into distress. The ripple effects of this refinancing crisis could be far-reaching. Financial institutions holding these loans may face mounting losses, tightening credit even further. For the broader economy, this could dampen consumer confidence and slow economic growth. Yet, amid this turmoil, there are opportunities for those who know where to look. Cash-rich investors and hedge funds are already eyeing distressed assets, looking to acquire properties at discounted prices. Additionally, creative financing solutions, such as seller financing or private equity partnerships, are gaining traction as traditional lenders tighten their belts. The $1 trillion refinancing problem is undoubtedly a challenge, but for those who can navigate it strategically, it also presents the chance to capitalize on once-in-a-decade opportunities in the real estate market. As the real estate landscape in 2025 faces unprecedented challenges, it's clear that not everyone will be impacted equally. While some will thrive amid these shifts, others will struggle to adapt. Understanding the winners and losers in this environment can help both investors and homeowners make informed decisions and navigate the market's volatility. Winners 1. Cash-heavy investors. Those with substantial cash reserves or access to alternative financing are positioned to benefit greatly in 2025. These investors can seize opportunities created by distressed properties or underperforming assets. As many property owners face difficulty refinancing, there will be a growing number of foreclosures and motivated sellers, allowing these investors to acquire properties at bargain prices. Real estate funds and private equity firms are also likely to be on the lookout for these opportunities, purchasing distressed commercial properties or residential assets in bulk. 2. Buy and hold investors. Long-term real estate investors who own rental properties are likely to see stability in their portfolios despite market fluctuations. While rising interest rates may make purchasing new properties more expensive, those who already own real estate can ride out short-term volatility. With limited housing supply and increasing demand in certain regions, rental income should remain strong, especially for multifamily housing and single-family homes in high-demand areas. 3. Adaptable commercial property owners. In commercial real estate, the winners will be property owners who can pivot and repurpose their assets. For example, office spaces that were once designed for corporate use may be converted into mixed-use developments or residential units. Warehouses and distribution centers are also likely to see increased demand due to the ongoing boom in e-commerce and logistics. Flexible, adaptive commercial property owners who can reposition their spaces to meet evolving demand will have a significant advantage. Losers 1. Highly leveraged investors. Those who bought properties with minimal down payments or took on high levels of debt during the low interest rate years are at a severe disadvantage. As refinancing becomes more difficult due to higher rates, many of these investors may face steep increases in mortgage payments or be unable to refinance at all. In some cases, they may be forced to sell at a loss or face foreclosure, especially if their properties are no longer generating sufficient rental income or are in less desirable locations. 2. Commercial property owners in declining sectors. Office buildings, particularly in urban centers with high vacancy rates, are facing a difficult future. The remote work trend has permanently altered the demand for office space, with many businesses downsizing their physical footprints or shifting to hybrid work models. Similarly, retail properties in struggling areas may continue to lose tenants, leading to higher vacancies and reduced rental income. These commercial property owners are likely to be the hardest hit in 2025. 3. Homeowners facing mortgage stress. For homeowners with adjustable-rate mortgages or those approaching the end of a fixed-rate period, the impact of rising interest rates will be harsh. Monthly payments could skyrocket, causing financial strain. Homeowners who purchased homes with minimal equity or those living in areas with slowing home values may find themselves underwater, unable to sell without taking a loss. This could lead to increased foreclosures and forced sales in certain markets. In this dynamic market, the winners will be those with the foresight, liquidity, and adaptability to make the most of these changing conditions. Conversely, those who took on too much risk or are slow to pivot may find themselves facing significant losses. As always, being informed and strategic will make all the difference in navigating the 2025 real estate landscape. As the real estate market continues to evolve, one thing is becoming increasingly clear. Affordable housing is not just a pressing need, it's the future of the industry. With rising living costs, increasing interest rates, and an evolving workforce, the demand for affordable housing is set to soar. Understanding why affordable housing is the future can help investors, policymakers, and communities align themselves with a trend that will shape real estate development for years to come. The need for affordable housing has never been more critical. In many major cities across the globe, housing prices have skyrocketed, leaving middle and low-income families struggling to find affordable options. High demand, combined with a shortage of new developments that meet the needs of working-class individuals, has created a housing crisis. The COVID-19 pandemic exacerbated this issue, as many people shifted to remote work, pushing housing demand into suburban and rural areas, further stretching supply and driving up prices. As a result, affordable housing, defined as housing that costs no more than 30% of a household's income, is becoming a top priority. In the U.S. alone, there is a deficit of more than 7 million affordable rental homes. This shortage has caused a dramatic rise in homelessness and has left many families facing housing instability, particularly as inflation drives up living costs. Investors and developers are starting to realize that the demand for affordable housing isn't just about lower-cost construction. It's about creating sustainable, vibrant communities. Today's successful affordable housing projects focus not only on the price of rent, but also on improving the quality of life for residents. Developers are incorporating green spaces, public transportation access, and amenities that foster a sense of community and well-being. These projects aim to build lasting relationships and integrate lower-income residents into the fabric of the neighborhoods they live in. The key to this shift is the understanding that affordable housing can be both financially feasible and socially responsible. With growing interest in environmentally friendly, energy-efficient homes, sustainable building practices are becoming a focal point of affordable housing development. Green building technologies such as solar panels and energy-efficient appliances are helping to lower utility costs for residents while reducing the carbon footprint of new developments. Affordable housing is also becoming a focal point for both government and private sector collaboration. Public-private partnerships, PPPs, are playing an increasingly important role in meeting the need for affordable housing. Governments are offering tax incentives, grants, and zoning changes to encourage private developers to include affordable units in their projects. This collaborative approach not only helps to address the housing shortage, but also supports local economies by creating jobs and fostering neighborhood growth. Incentives such as low-income housing tax credits, LIHTC, have been instrumental in boosting the development of affordable housing projects across the U.S. These initiatives provide developers with the financial motivation to include affordable housing units in their portfolios, which has made it easier for the private sector to play a role in solving the housing crisis. From an investment perspective, affordable housing represents an opportunity for long-term growth. While the initial returns may be lower than luxury properties, the stable and consistent demand for affordable units offers a reliable revenue stream. Moreover, affordable housing has lower turnover rates than market-rate housing, as residents are often more likely to stay in affordable homes for longer periods, ensuring a steady cash flow for landlords and investors. In the coming years, affordable housing will not only be a social imperative but also a financial opportunity for those who are prepared to meet the demand. Developers, investors, and communities who focus on sustainable, affordable living options will not only provide a crucial service, but will be poised to lead the real estate market into the future. Affordable housing is no longer just a need. It's a trend that will define the real estate landscape. By embracing the future of affordable housing, the industry can help solve a critical societal problem while securing profitable and impactful investment opportunities. Real estate investing in 2025 requires a strategic approach, with market shifts and new opportunities emerging regularly. As the landscape continues to evolve, savvy investors must adapt to these changes while staying focused on long-term growth. Here are some actionable strategies to help investors navigate the real estate market and capitalize on new trends. Number 1, focus on affordable housing. As discussed, affordable housing is a key growth sector in 2025. With a growing need for affordable living spaces, investors can look for opportunities in low and middle-income areas. These regions often offer higher rental demand and more stable cash flow, especially if the property is well managed. Additionally, government incentives for affordable housing development make this an attractive option for tax benefits and potential grants. Number 2, embrace remote work trends. The shift to remote work has created new opportunities for real estate investors to focus on suburban and rural properties. Many people are moving away from congested urban areas to more affordable locations. By targeting areas with strong remote work opportunities, such as proximity to tech hubs or emerging business districts, investors can find undervalued properties with great growth potential. Number 3, consider multi-unit and mixed-use developments. Multi-unit properties, such as duplexes or small apartment complexes, offer the advantage of multiple revenue streams in a single property. Mixed-use developments that combine residential, commercial, and retail spaces can be a lucrative investment, especially in growing urban areas. These properties tend to attract diverse tenants, reducing vacancy risks and providing steady income from multiple sources. Number 4, leverage technology for smart investments. Real estate tech is transforming how investors make decisions. Tools like AI-driven property valuation models, market trend analysis platforms, and property management software can help streamline operations and provide valuable insights. These tools make it easier to evaluate potential properties, manage portfolios efficiently, and stay ahead of market trends. Number 5, adapt to sustainability demands. Today's renters and buyers are more environmentally conscious. Sustainable and energy-efficient homes are in high demand, offering potential for higher rents and resale value. Consider investing in properties that can be upgraded with green features like solar panels, energy-efficient appliances, or water-saving fixtures. These improvements not only attract eco-conscious tenants, but also increase the property's long-term value. By employing these actionable strategies, investors can position themselves for success in the evolving real estate market, ensuring steady growth and profitability in 2025 and beyond. Looking ahead, the real estate market in 2025 presents a mix of challenges and exciting opportunities. While there are potential risks associated with rising interest rates, inflation, and the ongoing $1 trillion refinancing issue, the long-term outlook for real estate remains positive. With strategic planning and a focus on emerging trends, investors can position themselves for success. One of the most promising aspects of the future real estate market is the continued demand for affordable housing. As more people face financial pressures, the need for affordable, well-located properties will only increase. This demand will create long-term growth opportunities for investors willing to focus on this essential market segment. Another factor contributing to the positive long-term outlook is the continued rise of technology in real estate. The integration of AI, virtual tours, and data analytics is transforming how properties are bought, sold, and managed. These advancements will not only make it easier for investors to identify high-potential properties, but will also streamline day-to-day operations, improving profitability. Furthermore, as more companies embrace remote work, suburban and rural areas are poised for continued growth. This trend creates new possibilities for real estate investors, particularly in regions that have traditionally been overlooked. Ultimately, the key to success in the long-term real estate market will be adaptability. Those who can recognize emerging trends, such as the need for sustainable properties or innovative investment strategies, will be well-positioned to thrive in a market that is constantly evolving. With a proactive approach, investors can ensure their portfolios remain strong and resilient in the years to come. The real estate market in 2025 is at a pivotal moment, with both challenges and opportunities on the horizon. By understanding the evolving landscape, identifying winners and losers, and embracing trends like affordable housing and technology, investors can position themselves for long-term success. The key is to act now, whether it's refining your strategy, diving into affordable housing projects, or exploring innovative ways to leverage market shifts. Stay informed, adapt quickly, and take the next step in securing your future in real estate. The market is ready for those who are proactive. Are you ready to seize it?